All right, welcome. Today we are going to talk about something much deeper than just a trading technique. We're going to dive into a mindset, a completely different way of looking at the markets. It's a framework for not just surviving but actually conquering volatile markets, whether it's crypto, forex, or those high-flying tech stocks. And we're going to do it by mastering the bull-put spread. Now, this is not about reckless gambling. It's about structured, disciplined winning, especially as we peer into the future at the potential chaos that December 2025 might hold.
I want you to burn this quote into your mind. This is our fundamental truth, because without volatility, an options trader is, well, they're out of a job. Think about it like this. A master carpenter can have the best tools in the world, but without wood, they can't build anything. For a professional options trader, volatility is our raw material. It's the fuel for the engine. It is literally what makes strategies like the bull-put spread not just possible, but incredibly profitable.
Okay, so let's dive into this. To really understand the power of what we're talking about, I want to take you on a little trip back in time. Back to the absolute chaos of 2020, a time when the entire financial world felt like it was being tossed around inside an industrial blender.
I will never forget this. It's March 2020. My phone rings, and it's 2 o'clock in the morning. It's a good friend of mine, a guy who's been trading for decades, and his voice is literally trembling. But it wasn't fear. It was pure, unadulterated excitement. He said to me, "Are you seeing this? The market is giving us something we haven't seen in over a decade. If you know how to use options, this is the opportunity of a lifetime." And you know what? He was absolutely 100% right.
So what happened? The people who panicked lost their shirts. But traders like my friend, they made a fortune. So how did they do it? It's simple. They weren't trying to predict the future. They were selling the market's overpriced fear. See, they didn't need the market to rocket back up. They just needed to stop panicking and not crash below a certain level. And that right there is the core philosophy. You don't have to be perfectly right. You just have to structure your trades to avoid being catastrophically wrong.
All right, let's break down the actual tool that makes all this possible. Look, we live in a completely chaotic age. A single tweet can send Bitcoin into a nosedive. A bad earnings report can obliterate a tech stock overnight. But in the middle of all this noise, there are traders who are completely calm. Why? Because they understand the fundamental relationship between fear and price.
Okay, so how does this actually work? Let's get into the nuts and bolts. It's a two-part move. First, you sell a put option. The best way to think about this is you're selling insurance on a stock. You pick a price, that's your strike price, and you tell another investor, "I bet this stock won't fall below this price." For taking that bet, they pay you cash right up front. That's called the premium. But here's the crucial part. To protect yourself, you simultaneously buy another put option at an even lower strike price. That's your insurance policy. It puts a hard cap on your maximum potential loss. And the goal is incredibly simple. If the stock stays above the price you sold insurance at, you just keep the entire premium you were paid. That's it. That's your profit.
And this right here, this is the whole game. This strategy completely shifts your approach from prediction to positioning. Amateurs are always trying to predict. They're trying to guess the exact top or the exact bottom. It's high stress, and honestly, it's a very low probability game. Professionals, on the other hand, they position themselves. Instead of betting on a single price, you're betting on a wide price region. It's the difference between trying to hit a tiny bullseye from 100 yards away versus just needing to hit any part of a giant target. You're not trying to guess where the market will go. You're defining a massive area where you believe it probably won't go. That's the strategic advantage.
Okay, theory is great, but let's talk about the real world. I want to show you how this plays out on the front lines, with real traders during periods of extreme market stress. These stories really bring the mindset to life. I want you to meet a trader named Lucas. He's a Swiss guy I know, trades a lot of crypto. Now picture this, it's 2021. Bitcoin is ripping towards its all-time high of $69,000. The public FOMO, the fear of missing out, it was absolutely off the charts. Everyone was frantically buying. But Lucas, he was doing the exact opposite. He was calmly selling premium. So while Bitcoin was screaming higher, Lucas was consistently selling bull-put spreads, with his sold strikes way down at 52,000, with his protection at 48,000, and week after week he just collected profits. Now, was he smarter than the market? No. He just chose to play a different game. He was playing a game with a ridiculously high probability of winning. He was betting against an extreme, unlikely crash instead of trying to guess how much higher the speculative rally could go. Now, this doesn't just work in crypto. Let's shift gears to a completely different market. I want to tell you about Andrew, a veteran gold futures trader. The year is 2022.
The Federal Reserve is hiking interest rates at a pace we haven't seen in decades. Every single inflation report was sending the markets into a tailspin. It was pure chaos. Most people were terrified. But Andrew said something to me that I will never, ever forget.
Andrew didn't just sit there and watch the volatility happen. He actively traded it, and his primary weapon, you guessed it, was the bull-put spread. Why? Because the premiums were sky high. He didn't care if gold swung up or down $100 in a day. All he needed was for gold to not completely collapse below the strike levels he was selling. So while the market was shaking violently, Andrew was earning a steady, consistent income because he understood a simple truth. He was literally selling the market's overpriced fear and uncertainty back to itself.
So, we've seen how this works in past crises. But what about the future? This is where it gets really interesting. Because when we look ahead on the calendar to December of 2025, we start to see a convergence of factors that could create a perfect storm, an absolutely ideal environment for exactly this kind of strategy.
Let's break this down. There are three key elements at play. First, look at volatility. End-of-year markets are notorious for being thin. Low liquidity, big funds are restructuring, major economic forecasts are coming out. What does that do? It naturally spikes implied volatility, which means option premiums get much, much richer. Second, psychology. The crowd has a tendency to overfear uncertainty, especially at the end of the year. That fear is an asset for us because it creates an opportunity to sell that overpriced fear for a profit. And finally, positioning. In a chaotic market, making a simple directional bet, up or down, is a coin flip. But this strategy gives us a massive safety buffer, allowing us to profit from the chaos itself, rather than being a victim of it.
Now, this is maybe the most important part of this whole discussion. To navigate an environment like December 2025 like a professional, just knowing the strategy is not enough. You have to operate with unbreakable discipline. This is what separates amateur speculation from professional execution. So let's go over the 4 golden rules that the pros live and die by.
Rule number 1. Use data, not feelings. Set your strike prices based on hard data. Support levels, volatility metrics. Your emotions don't care about your portfolio, but technical levels do. Rule number 2. Choose your battles. High volatility is good. Pure, unadulterated chaos is not. Think of it this way. A strong wave can carry you to shore, but a whirlpool will just pull you under. Rule 3, and this is crucial, respect risk. Limited risk does not mean zero risk. The risk limit is there to keep you disciplined, not to make you reckless. And finally, rule number 4, aim for consistency. This is about hitting singles and doubles, generating a steady income stream. It's not about swinging for the fences and trying to hit a lottery jackpot on every trade.
All right, to bring all of this together, I want to conclude with one final story. It's a story that, for me, just perfectly encapsulates this entire philosophy we've been talking about. A few years back, I was at a big finance conference, and I met this middle-aged guy, totally unassuming, wearing an old jacket. Nobody really knew who he was. But when it was his turn to speak, the entire room just fell silent. And he began with that simple but incredibly profound statement. He went on to explain how he used this one single principle and the bull-put spread to build his entire fortune. He used it to profit through the dot-com bubble, the 2008 financial crisis, Brexit, the COVID crash, you name it. He said when the market was calm, he would rest. But when the market was chaotic and everyone else was panicking, he was at his most clear-headed. And with that one final line, he just perfectly summarized the very soul of a professional strategist. He wasn't out there fighting the market, trying to be a hero. He was simply standing on the sidelines, collecting the payment for insuring against the market's deepest and very often most irrational fears. And that, right there, is the ultimate lesson for all of us. The bull-put spread doesn't make you a genius predictor. What it does is it transforms you from a gambler into a strategist. It gives you a high probability edge. It takes amorphous risk and turns it into a structured, defined advantage. So, as you look toward the potential chaos of December 2025, don't think of yourself as needing a giant cannon to win. Think of this strategy as a short, flexible spear. It allows you to operate with precision and safety, bringing home the spoils without having to charge headfirst into the heart of the battle.
So when the market eventually becomes volatile again, and believe me, it will, the crowd is going to feel fear. But you're going to smile, because you'll know the truth. You'll know that volatility is not the enemy. For the strategist with a plan, it is a gold mine. Thank you for listening. Now go turn that fear into profit.